Good day, guys. Welcome to Forex Walker. Here at Forex Walker, we do what we call arbitrage trading. So this is the Euro USD on the daily time frame. What we're doing here is that at the moment the euro is currently pricing in some sells, and the US dollar is pricing in a little bit of a bullish run, but somewhere down there the Okay, here I was expecting the to get a break above, which is the market manipulation on the third touch, but it did not give me that much of a pullback. So the euro itself is actually pricing in some. If it doesn't happen in Friday, then I will have to hold my shorts from here. But this bearish move that we're talking about in the US dollar gaining strength is a temporary move. That means somewhere down there we need to break this low. Somewhere down there, the US dollar will give up on this downtrend and it will give us that reversal. The reversal does not happen because the euro is gaining strength. The euro is also bullish for the whole month. So what we need to do is find a currency that is ready to be sold, which is the pound. That currency that is ready to be bought, which is the pound. So the euro pound will give you a beautiful economic divergence. So because the US dollar is about to give up. The US dollar is pricing in those sanctions that I was talking about and those tariffs. So it will be bearish, even though the macroeconomic reports are trying to tell us that the US dollar is bullish. I know for a fact that somewhere down there it will give up. Whether it will give up after breaking this low, that will be displayed here in price action. But those are things that I'm looking into. What is important here is that we got volume here. We broke this low and then we broke this high and then we went up there. But it would have been easier for me to take this trade from up here if it was about to reject from up here. So that's why I don't believe that this trade is actually here. I believe it has to go up there. I have shown something like this on the Turkish lira with the euro. So that's where I'm expecting those things to happen. That's why I'm expecting some kind of a pullback that lands here so that we can sell the market nicely. But the US dollar is not is only bullish for now, and towards the end of September, it will price in those sanctions. It will be bearish. So the reversal here is not because the euro is gaining strength, is because both currencies is because the US dollar is giving up on that bull move. Okay, I know that we're talking about shorts, but when the US dollar is bullish, it's bullish downwards in this market structure. So when the euro is bullish, it's moving upwards, and when the dollar is bullish, it's moving downwards. So that's just why I'm talking about the word bullish, referring to the US dollar, even though I'm pointing downwards. So it will be bullish. It will give us something like this, but somewhere down there, it will give up. We'll see where it decides to turn around. I don't know where. Even if it moves slowly, it'll be fine. But the euro is actually pricing in those cells, and it won't give us. It's giving us a monthly. What do I call it? A monthly economic divergence, but it won't last because the US dollar will give up somewhere. So here we have a CHF with the pound that I've been monitoring for some time, but right now we have an issue with the CHF. The CHF is actually bullish for the month. In fact, the CHF is not doing well in terms of inflation, but most of the time they're pricing in some bullish economic reports, especially because Switzerland is in Europe. So they trade with the euro. That's part of the reason why it was fighting against the pound. It was preventing the pound from moving how the pound is supposed to move. Here we have two fibs. So I normally when I'm waiting to take a trade to the bullish side, I drop it 50% of the previous elbow that the market had created, and that's how I was able to draft this 50% fee here. But the actual 50% fee is here, and this is a trade that will delay because both currencies are bullish. So that's some of the things that we need to watch out for. This trade is the AUD USD. So we talked about the AUD giving us a temporary uh, bullish move. So it will be the AUD actually is pricing in some sells, and the USD is giving us a monthly or a temporary bullish move that will last for almost a month. So we're expecting something like this when the US dollar decides to give up on the bullish move, and when it starts to pricing the sells, I believe the market will head that way. But when both currencies are losing strength, when both currencies are moving in the same direction, you need to do a little bit of calculations for you to know which currency is weaker than which one, because both currencies are weak. So you need to do your calculations in terms of which currency is pricing in the preliminary reports and all of those things. You need to do some calculations on that. So here we had a first touch, second touch. We did manipulate, but I'm not satisfied with this manipulation, even though it will continue to drop lower. I'm not satisfied with it. You know how I trade. I normally look at the previous shoulder that was broken into when volume came in. Volume, I told you that volume is when the market breaks the previous low here with this elbow and it breaks the previous high. That's volume. So that's how I view volume. I don't know about other people. That's how I view volume. So here I was trying to make a demonstration. This is the Fed fund rates uh, in the blue line. And this pink line here, you can see it has some numbers that are pink or purple. I think this is pink. So this is the hiking and the cutting of interest rates. That we call it an interest rate cycle. These are the Fed funds rates. So what happens here is that when the US dollar starts to price in some cells, where's that vertical line that I normally use? This thing does not want to draft anything. That's fine. So when we start pricing in some interest rate cuts, what happens is that the market continues. Market starts it continues with as a bullish move. It explodes, and when they start holding interest rates, what happens is that it starts to pull back a little bit or move sideways. It either moves sideways or it pulls back a little bit, because when you hold interest rates, that means the currency is doing well. And here we also have another hiking cycle that was began. The market, the the gold started to, this is gold, XAUUSD, the gold started moving sideways, and when they started the hiking cycle, it sprung higher. And when we got here to the first cutting cycle, it started moving sideways. And the reason why it moved sideways is because the cutting cycle was over. When they started hiking, it decided to spring higher as they were hiking. And this is the opposite of what is supposed to be happening in terms of interest rate cuts. Here we started a cutting cycle. You can see that gold is slowing down, it's trying to slow down. When they hold, it will go bearish a little bit. So this is one of the economic indicators that I look into. Let me check the time. It's one of the economic indicators that I look into. So from this CHF that we are talking about, the best one to trade is the pound CHF. The pound CHF will not be able to give us the necessary pullbacks that we're looking for, because the Japanese yen is pricing in some sells. in its macroeconomic reports, and the pound is pricing in some buys. So for those who are holding the pound CHF, those who held it from April, they can keep holding it because we're not pricing in any sells so far. So this thing will continue to move higher. If it does create a pullback, it creates it because we wicked the previous high here and we had a pullback. This is the only pullback that we have. The market will continue to move higher. It is not coming back. So the best way to enter the market is instant execution. So this that US dollar JPY that is also not giving us any pullbacks. So the US dollar will give us that tiny bullish move because the Japanese yen is pricing in some sells. So even if we do get some kind of a pullback, it won't go as far as this level. So this thing that you see here of this uh, economic projection that you see here will not happen. So this pullback at the 38.2 will actually push the market higher because the JPY is already pricing in. Remember, somewhere up here, the US dollar will give up, and both currencies are going to be bearish together. So even if it does move higher, it will move not because the USD is bullish, but because the JPY is more bearish than the other currency. So I don't want this video to cut me off, but those are the things that I'm looking at. And those who are trying to trade this AUD USD, it would be better to hold the trade with the NZD, but the NZD is already oversold. So, but you can still hold it with the NZD. That's how you will be able to get a positive carry. But those, the NZD had already priced in the sells, and because of the market correlations, that's the reason why the market fundamentals and both the economic correlations between the AUD and the NZD, we are pricing in those cells uh, in the AUD in the AUD. So that's those are the economic expectations that we're having. I don't want this video to go past the the threshold of time that is 15 minutes. So here we are bullish, but as we start with these interest rate cuts, somewhere somehow, even though you see this peak started because of the interest rate cuts, but somewhere somehow it will slow down and give us a sideways move or a tiny bearish move. It does not necessarily have to be as bearish as this, but because the US dollar is holding interest rates, we may not get we may not get all the way down to uh, those strict pullbacks. But this is a negative carry on gold. So I was supposed to change this color into gold because this is gold. So the Fed funds rates are nothing but interest rate cut cycles. They indicate interest rate cut cycles and hiking cycles. So I have to say goodbye to you guys. Even though this is a bearish move, somewhere, somehow, the US dollar will give up, and both currencies are going to be moving in the same direction, which is bearish. So you can pick and choose which currencies you like to trade, but you need to look at the JPY as the permanent bearish mover and the pound as the permanent bullish mover, and you can hold those trades like that for some time actually, especially because the pound is not moving anywhere closer to a recession. Yes, they gave us an interest rate cut, but that interest rate cut is the last interest rate cut for the year, and those central bankers, they actually destroyed the trade that I had with the pound SGD. And those are things that happen. And now I'm holding the CAD, but the CAD is not as weak as the SGD. So goodbye, guys. I will see you guys on the next episode.